So the monthly opened here. These delineations show the weekly opens. On second, the week opened on 2nd, 9th, 16th, 23rd, and lastly 30th, which is yesterday. So on 9th, the week opened. The monthly opened here, but the week opened on the 2nd. And as you know, a month is consisted with 4 weeks. That's a quarterly theory on its own. So let us mark this one also here. So the delineations here show the 4 weeks of the month. 1, 2, 3, 4. Those are the 4 weeks of the month. So you mark every opening of each week so that you know how price is moving from one PDRA to the other. So on the daily time frame, we forgot to mark out this fair value gap over here. It will act as a guideline. This is a fair value gap and is coupled with this order block. So, and it's on a daily time frame, so I anticipate a retracement once we get to this fair value gap. That's an anticipation. So after the anticipation, you now go to your charts, mark out the openings of the weekly, daily, and 4-hour opens based on the days of the week that you are trading, because basically I will be showing intraday trades and scalps. So after that, we have already, let's go to the hourly. This is the area that I wanted us to learn. This area, as you can see, the prices are jagged and they can easily show you dust if you're not conversant with what we are going to show you here. But I promise, after showing you what I'm about to show you, you will learn a lot on this thing. Quick Capital Connect is the name of the brand, the name of the company. The company deals with a lot of services, from financial market analysis, market research, project management, business analysis and development, investment strategy, precise ones to be specific, as I'm going to show you here. And market analysis is what we'll be going through on a day-to-day basis. So this is on an hourly chart. Your setups should be framed basically on an hourly chart, but you have to start from the weekly to find them. So far, this is the first video I'm producing, and I should just hope and pray that it all becomes a success. So let me just mark these things out here. So this small piece of price action here, we can learn. You can trade all these movements. You can trade this, 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 you can trade this one, 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 you can trade all of these. But I'm not advising you to go into your charts and try to catch all these trades. Only one of these can pay you a monthly salary. One of all these can pay you monthly salary. So it's up to you and your discipline that will make that happen. Because as you can see, evidently we are breaking simultaneously, we are breaking the swing lows, and failing to break the swing highs. We engineered liquidity here of relatively equal highs, then we pierced through it, then we broke lower. The setups, you will find them in lower time frames. So I just advise you to be very focused and keen as we go through this. We go to the minute 30 time frame. Things are now starting to get clear. They're starting to get clear. This is the fair value gap on the daily time frame that I had shown you earlier. And on the 30 minutes time frame, you can see this setup here. I don't know if you can see it, but for me I can see it evidently. And I can also show you how to trade this setup. So we will start with this one. Go to this one, then go to this one, then go to this one, then go to that one as we go. But for today, I just want to show you this. I just want to show you this setup here. This is what I want to share with you today, and I hope you learn. So let us mark the daily openings of what happened there. That's on 17th. That's when the day opened. The day opened on 17th. Yeah, it's boring by the way to do this thing, but failure to do them will lead to you trying to find shortcuts on how to make quick money here. And in the long run, shortcuts don't make money. Process make money. So this is the daily open for us on 17th, and we are trying to get a setup from there. Whoa. Daily open 17th, and let us see which day was that. 17th was on Monday, after the week opened on 16th here. Basically not good days for trading, but we can wait and see how price behaves. On 18th, the day opened here. This is like a consistent routine you have to follow for you to find these setups. On 19th, you just mark them out. Then on 20th, what I'm showing you is just basic. There are no indicators on the charts to distort your mind. Just basic price action. So on the 30 minutes time frame, as you can see here, this energetic run higher enticed buyers to even buy more. You wait. As all this is happening, you are waiting. Maybe you are not even on the charts. You are waiting to see the reaction after we fill this fair value gap. And remember, you are on the block, and on 18th That's on Tuesday. So you can see after that energetic run higher, we experienced a stop run on the 30 minutes time frame, which is very, very nice. We tried to find a move lower, then pushed higher. On this thing here, you're not doing anything on this thing here. We are trying to find energetic price movements, or rather bigger price movements, so that you can make money. You only make money if you are on a bigger move. Smaller moves also make money, but for me, I do prefer these bigger moves. And for you to catch a bigger move, you also have to risk also much bigger. So as you can see, after the stop raid, we displaced lower, and it was an energetic movement that displaced. We displaced lower and created a fair value gap. So your work is to mark that fair value gap on the 30 minutes time frame and wait for a swing low to be created here that will find a retracement higher. And you couple that with the time so that you avoid the noise, the market noise. So that's the fair value gap, and our range now, our new range has been created after breaking this swing low that took out buy side liquidity, the buy stops. You measure using your Fibonacci retracement that basically I have divided it into 4 equal parts. There we go. So this was the 30 minutes time frame. This is the 30 minutes time frame, and we are on the volatility 25 index. We are on the daily order block, and this marked area from here to here, it's a daily fair value gap. The white space that you see here is the fair value gap on the 30 minutes time frame. The range of our displacement is from the marked Fibonacci retracement here. Our stop loss is marked from this area here to 25%. We are now trying to define a range, a predefined one. For you to make money consistently in this marketplace, you will have to have a system, and this is what I'm trying to show you here. You measure 25% of the upper quadrant of the displacement, to put it on easier terms so that you can understand, to place your stop loss. If it gets hit, you become content and you wait for other setups. The market shifts on our 1 time frame, our 4 time frame, 30 minutes time frame, 15 minutes time frame are more probable to take root than those on the 1 minute time frame. Though they also work, but you must have consulted the higher time frame for you to take the setups confidently. So I will mark it as a dotted line so that you can differentiate. So this is where the stop loss has to be placed if you're taking the shorts on this fair value gap, and every short must be taken below the 50%. When I say below the 50%, these are the ranges 0, 25, 50, 75, 100. Below it is not from 50 to 100. Below it is from 50 to 0. So when price just gets above 50%, you shoot, but the stop loss must be placed right here. But for those who need to take more precise setups, you will have to now drop down to lower time frames from the 30 to be able to get them, the more precise ones with a lower risk. Now the first target is 161.8, and you can see the target slightly just beneath it. There is a sell side liquidity. So let's go to the 50 minutes time frame. Things are now getting clearer. The day opened, created the liquidity, found a run higher, stop hands, displacement, fair value gap. And what just happened, what happened here is the same thing that has happened here. I don't know if you can see it. The things that I'm going to show you here are the things that are going to make you money if you become consistent on finding the setups and consistent on following the system. If you just deviate, then that is it, you lose money. The fair value gap above 50%, the stop rate again, the run that happened here, there is it, the stop rate, the fair value gap above 50%, our first target, our second target 261.8, and as you can see, it was our second target was also hit successfully. Here is it being hit. Our stop loss was never triggered at all. These are the kind of lessons that you have to be very focused on, because they are very technical, and it needs a great focus, a great deal of focus to be seeing them real time. Let's go to the 5 minutes time frame now. They happen, guys, they do happen. So this is what I will be taking you through to join our mentorship, or rather to get these personalized strategies and to be guided on them on a day-to-day basis for a period of 1 month. You'll have to pay $9.99 for only 1 month, and we will be taking you through this thing on a day-to-day basis. We'll be taking your questions on a personal basis, on a day-to-day basis. It requires a great deal of discipline and patience to be doing this thing. As you can see now, things are getting hotter. The stop rate, then we displaced lower, broken the market structure shift, then here we go. This is where now we want to see how you will enter the market. You can enter the market once we get about 50%. The stop loss, will place it as we have defined it on the 30 minutes time frame. But for those who really need to do this thing on a day-to-day basis, you have to know the time of day and the candlestick formations of the 4-hour time frames, so that you can be able to enter this thing on a precise manner. And I guarantee you, you will get best trades that you have ever dreamed of. So we will mark this day. We will mark the day into 4 equal parts, because for you to trade the accumulation, manipulation, distribution, you will have to incorporate the quarterly theory for you to get these trades. So a day is divided into 4 equal parts. That is 6. 12, 18. These are the 4 equal parts of the day. 19th was on Wednesday. That's a good day to trade. That's a good day to trade. And as you know, the candles open, they accumulate, they manipulate, then they distribute, and all the vital price actions happen on the kill zones. And that's the kill zones is where I advise my students, or rather whoever wants to trade using these models, to take the trades of the kill zones to avoid the noise and the impulsiveness. So this was the 19th. We opened, displaced higher, a fair value gap. As you can see, it's here. The trades are many. Let me tell you guys, there are many. Like this one is a trade on its own. If you know how to trade. And let me tell you something very important. The daily openings, weekly openings, monthly openings, our 4 openings, our 1 openings, 30 minutes openings, and every opening, even the 1 minute, there are very strong support and resistance points. I've just given you gold over there. So after we opened on 19th, we took out liquidity on the downside. You are doing this, but on the sidelines, not on a trade. You're waiting for the trades to take out buy side liquidity and for the price to get above 50% of our displacement, our dealing range. Now 50% is here, as you can see. This is the 50%. A stop run happened here on the 5 minutes time frame before we found our displacement higher. This is a trade you could have taken, a very nice one, but now we leave this alone. Our concentration is on the bigger picture after taking out the stop rates here. So by the way, this is the first video I'm creating, so I'm allowed to make some mistakes, though I'm avoiding them. I have defined my kill zones based on 4-hour openings. As you can see, the day opened at 00. This time is just the one on the MetaTrader. So my kill zones are 3 hours. 2 hours after every session there's a kill zone. 2 hours after every session there's a kill zone. So the kill zones takes 3 hours. After 2 hours we start earning for setups at 2. That's where you get the accumulation manipulation part of it. So let us define this setup here. This is the setup that we are going to define. Let's go to the 2 minutes time frame. There goes the magic now. This is on a 2 minute time frame. Remember, we have opened here on the daily, accumulated a little bit, taken out sell side, displaced higher, fair value gap, daily opened, find resistance and pushed higher. It's not hidden from you guys. It's not hidden. So our key zone starts at 2, and you mark that out. These are 4-hour open, a daily open. That is because every 4 hours takes 4 hours. So these are 2-hour open. You mark it out. These are 2-hour open. Kill zone starts at 2 hours from the opening of every session. So the kill zone takes 3 hours. The 3 hours are from saa 8 to saa 9, from saa 9 to saa 10, from saa 10 to saa 11. You are hunting for setups on those periods of time. And as you can see on the 2-hour open, on this fair value after taking buy side liquidity, this is the buy side liquidity now.